All right, welcome back to the channel. We've got our weekly stock market update, and what another doozy of a week we had in the stock market. I am seeing a trend. We get a big drop at the beginning of the week. We recover going into the weekend, sell off on Friday, drop on Monday, recover, and now we started again with the pullback going into Friday. And based on patterns, we'll look to see a big drop on Monday, and then we'll recover for the rest of the week. But who knows? So we're looking at the Nasdaq here. It did have a nice recovery, but Monday was brutal. I don't know if I made a video on Monday. The weeks are blending together. Things feel upside down. I can't catch my breath in this market. There's so much going on. I'm certainly enjoying it, but it's a lot happening every single day. So let's take a look at all the indices. Russell 2000 here, not doing a whole lot, chopping away sideways. Dow Jones, almost near an all-time high. Big sell-off today in the markets. S&P 500, again, got pretty close, and then we are pulling back as well. Gold, look at that, all-time highs. Ripping, gold is looking good. Oil pulling back again. That was quite the move initially, with all the tariff news, and then we've just sold off all week. Interesting there. Bitcoin going all over the place. Big pullback on Monday morning, recovered, and then just sold off. So interesting stuff going on here. A lot of movements across all assets. The dollar, again, looks like oil had a huge move with all the tariff news, and then has since corrected that move. And we will see what next week brings us. We had a big spike in the volatility, but we're giving all that back. There's no continuation on a lot of these moves. We're just kind of chopping sideways, but it's whippy. It's whipping around. Let's take a look at the rates here. Today was a big move back up, but we are seeing a nice steady downtrend. Maybe this was the blow off top. Maybe we find support at this red line and we keep chugging back up towards the 5%. I feel like the 10-year yield wants to hit 5%. Just feels like it wants to be there. And then see what the market does when we get there. Could be another huge sell-off like we had back in 23. A lot of earnings. I will do separate videos on earnings, but there's a couple names I want to talk about this week. Tesla is at kind of a very interesting point here. It wouldn't surprise me if we get a bigger breakdown, and it wouldn't surprise me if we get a little bounce. So it's kind of at a do or die point, and it's going to make a big move. It could make a big move back up here and then pull back down, or I could see it just completely failing and getting down to the 330, 300 level. We'll have to wait and see. Again, we talked last week, and if you watch my Tesla earnings video, the numbers weren't good. The stock didn't move. This was the move I was expecting to happen after earnings. It was just a slow bleed that took place last week versus a quick drop on earnings. I'm not going to dive into some of these earnings, but Google had a nice big drop here. Amazon pulling back as well. I will be doing earnings videos on these, so stay tuned. The chips, the SMH and NVIDIA had a nice week this week. So good recovery for NVIDIA, but still we're nowhere near where we were when we dropped. We still got a long way to fill the gap from the whole DeepSeek news. So NVIDIA kind of got a double whammy, the DeepSeek news and then the drop with all the tariff news. So 2 weeks in a row, it had a big gap down on Monday. But this week, there was a lot more buying coming in for NVIDIA. So that's interesting to see. A couple other names here. AMD, Advanced Money Destroyer. This thing is just in a very clear, ugly downtrend. Apple had a nice pop and is giving that back. Again, some of these whippy moves. A lot of movement, but if you zoom out over the month, the stocks aren't going anywhere. So same thing with the market. It's going up 3% and then down 4% and negative 1% on the week. Microsoft is a clear example here. It's making these huge whips up and down, up and down, up and down. And it looks to me like it wants to get under $400, and we will see what happens there. Costco, ripping. This is the belle of the ball here, Meta. I think Meta's had like 13 straight days of green. Just unbelievable. And then Palantir, unbelievable move, over $100. So congratulations there. Okay, that's the individual stocks. Let's go ahead and get into some of the news. This week, we already talked about the indices, but this is the big thing I want to talk about. There was a lot of news this week. We had a lot of jobs numbers. Looked like the jobs numbers weren't anything too big of a deal. So I look at the reaction more than I look at some of these numbers, because especially with the jobs numbers, there's been so many revisions. I don't necessarily dive too deep into what the number was announced. I look at how the market's reacting to some of this data. Now CPI is a different story, but when it comes to some of the unemployment data, I just look at the market's reaction, because a lot of these numbers get revised down the road. So I'm not too I don't get too excited about 143 jobs added in January, because there's probably going to be some revisions within a couple months to where maybe that was only 90,000, something like that. But did look like the market is indicating a potential slowdown in the labor market. We'll have to wait and see. But let's talk here about the Sovereign Wealth Fund announcement. So there's been all these executive orders going through. This was another one this week that I didn't really see coming. But it is going to be interesting to see how this works out. I could make the case for it. I could make the case against it. The whole thing is going to be, how is this rolled out? How is this done? So Donald Trump signed an executive order directing the creation of the first United States Sovereign Wealth Fund. This aims to invest in infrastructure, manufacturing, and research, potentially positioning it among the world's largest sovereign wealth funds. Notably, President Trump suggested that the fund could be used to acquire assets like TikTok to address national security issues or concerns. So a lot of countries out there do have sovereign wealth funds, and the way those are typically set up is, let's use Saudi Arabia as an example. They have a large amount of excess profits from their oil business, and they want to diversify their profits, so they take that money, put it into a fund where the proceeds from the fund are used for the country. Now, Norway has one as well. They had a ton of profits from their chemical businesses and oil, whatever they have going on there. And so they said, we're going to set up a fund, we're going to invest, and then we're going to use those funds for the population for whatever we need to down the road. But instead of holding cash, they're saying we're going to invest that into stocks, bonds, real estate, whatever. So Norway owns a little bit of everything. And I know the Saudis are a little bit more strategic on what they want to buy, but it is interesting. And if done right, this could be great. I really encourage people to check out what Brad Gershner's been working on. He has a program called Invest in America, something like that. And his whole thing is, he wants to have every newborn in America to get $1,000 or a small amount of money in the S&P 500, and they can access those funds when they graduate high school, when they serve in the military, when they pay their first taxes. But imagine $1,000 invested in the S&P when you're born, and it has 18, 20 years to compound. Then you can use that money. Maybe you keep it until you retire. Maybe you use it for a down payment on your first house. But it's an interesting concept to plant a seed really early for people to use down the road, and that may take the burden off of Social Security and some of the other, some of the other bills that the government has to pay down the road. So that's not what this is. This sounds like more like the U.S. hedge fund. If you're going to be buying TikTok and buying maybe Greenland or the Panama Canal or whatever crazy next thing you want to buy, that sounds more like a United States hedge fund. And also, the question I have is, where are we getting this money? We're already drowning in debt. So where are the funds going to come from? I hope they don't take more tax money or hit the printer. I don't know. But, that's my case for and against. There could be good things for it. Okay, great. Instead of just printing money and sending it wherever and not getting a great return, if we can take some of our tax revenue or take some of our funds, invest it, and then use those funds as they continue to grow to pay Social Security, to build bridges, to rebuild after natural disasters, whatever, that makes sense. So I see the pros for it. I see where there could be a huge conflict of interest, and I could see how things could get real south, real weird, real quick, and we already have a ton of debt. So it'll be something I keep my eye on. You're also hearing the possibility of this will be part of where they buy and hold Bitcoin. Who knows? There's a lot to be sorted out when it comes to this, but I do think it's interesting concept. We'll have to see how it works out. So that's the sovereign wealth fund, but it could be treated more like a hedge fund if you're going to go buy TikTok. So anyways, I think that is going to be interesting story to follow up on, and it's still got to get passed through the courts. So we'll have to wait and see. But conclusion for this week, it's been another volatile week shaped by all the policy shifts and economic uncertainty. There's so much uncertainty. You don't know, are tariffs on, are tariffs off? There's just things like that where there's so much going on. But that's where there could be some opportunity in the market. This week, market saw increased volatility as U.S. sovereign wealth fund announcement raised questions about government-led investments and national security. Weaker jobs growth fueled speculation of Fed rate cuts, and inflation concerns kept investors cautious. Meanwhile, retail investors aggressively buying disrupted institutional So retail investors, their aggressive buying disrupted institutional strategies. I don't think that's true. I'm going to delete that. That's a bad statement by AI. But we are seeing, especially in a company like NVIDIA, we're seeing retail really come in and buy the dip, which to me is concerning. We want the big guys to also come in with retail. Not that retail is going to be wrong, but the odds are not necessarily in the favor if retail is the only one buying. We want the institutions to be buying, because otherwise, if they're not buying, they're closer to selling. So you don't want to get dumped on. But NVIDIA did have a nice week. Hopefully it follows through. But there's just going to be so much more volatility. And what we're seeing is no follow through on the volatility, which is good. We're seeing these short bursts and then revert to the mean, short bursts, revert to the mean. That is very interesting. So as markets digest these developments, the volatility is likely to persist in the coming weeks. This is not financial advice. This is just my opinion. I think it's okay to start looking around and nibbling on things. I'm definitely looking around at, if Tesla gets under 330, if Microsoft is under 375. So I'm probably due to make a shopping list video, because there's a lot of things out there. Apple back at 220. We're just a week away from Apple being 210, 215. And to me, that's not a bad place to start a position with something like that. Google back down to 180. Amazon 225. So we're starting to get to the point where, I can be constructive and I can put some money to work. I haven't been doing any aggressive buying, but I think we're getting closer and closer. And we'll have to wait to see when there's a bigger washout. The problem I'm having right now is any dip that happens, it's bought up real quick, and then there's another dip, and then it's bought up real quick. So I'm just waiting for a little bit more follow through on some of these moves. But I do think there is, we're getting close to being able to, for me personally, start to make some moves. But I also think 2025, we're at all-time highs for the stock market. We're near all-time highs. I'm always going to keep a little bit more cash than I want to have, just because I think we're due for, this year, some point, we're due for a little bit of a correction. Now, maybe we're starting one right now. Maybe we're not. Who knows? But a 10 to 15% correction would not be the end of the world, would be very healthy, and we are probably due for one of those at some point this year, and that's when I will be lighter on the cash. So until then, I will let you all know, but stay tuned for some earnings videos. Next week I'll probably do a shopping list video, and whatever craziness happens next week, we'll talk about it. So that's this week's update. Have a great weekend. Peace out.